Hey everyone, Douglas here, and welcome back to the channel. Just when it looked like we were going to kind of get over that hump, break through some key resistance, and kind of start that gamma grind into new highs, all hell seemed to break loose, and we found ourselves selling off quite a lot on Tuesday. Tiny little bounce today, but nothing much. And yeah, this market has found itself in a very precarious spot. So want to discuss a couple topics. We'll look at this chart up here, S&P 500 for a brief moment as well. But I just kind of want to lay out kind of how I've seen the last few days play out and kind of where I think we're at. And yeah, kind of what the big triggers that could induce a deeper sell-off in the market might be at this current juncture. So anyway, before we get into it, if you are new here, make sure you hit that subscribe button, turn that notification bell on so you won't miss any updates. And if you find this video particularly helpful, hit that thumbs up button. Really helps out the channel, helps out that YouTube algorithm. Yeah, you guys know the drill. Anyway, let's get into things. And yeah, let's just set the stage here, right? So earlier this month, as we were headed towards OPEX, right, the Friday, there were kind of two big hurdles, if you will, that I thought the market really needed to get over, or just they need to be taken care of, if you will. Otherwise, I really thought the kind of gamma reset that would happen on the week following could really kick some selling off that might get pretty nasty. We did see some selling with the following week after 16th was a Friday, so the following week after that we did see some selling take hold. However, one of the two issues that I thought really kind of needed to get resolved was we were seeing a massive reserve build in the markets. And the other issue, I'll talk about this in just a second, was the debt ceiling. Okay, this needs to get resolved and kind of the drama going on in Washington. But going back to the reserve situation, this actually did get resolved when the Fed came out and had their the rate speech. Following that, we found out that essentially they were going to expand the reverse repo purchase agreement, and we saw reverse repo numbers shoot higher, and banks were able to clear some reserves off their balance sheet, which helps the construction of their balance sheet. They can bring on more risky assets. So we did see that, and that I think is really kind of what kind of gave the impetus for the selling to kick up here prior. I'm sorry, the buying to kick off a week prior, and then we got that little bounce out of that. The problem is, one of the things I did is it was such a kind of succinct move, right? We saw the reserve balances drain so quickly. In fact, I think that's really what kicked off the spike in rates and the sudden selling in bonds. That can be sometimes kind of depending on the current makeup, the nature of the balance sheet of the large banks. A reserve drain can trigger a sudden spike in yields, and so I think there was kind of a knock-on effect that occurred where one problem got resolved, this reserve build, so quickly, and again in such a succinct manner, that it actually caused another problem, which was to force yields higher. Now, when this happened, a couple other items fall in line at the exact same time. You saw the yield spike, you also saw oil spike, which probably helped the yield spike even more. You had all these things kind of align at once, and that spooked the market a bit, right? And certainly there are looming inflation fears out there. You had all that pile up all at once, and then you got tech stocks to really take a beating, which makes sense. Inflation, not good for tech. And so you saw particularly higher yields, I should say, not good for tech. And so you saw the NASDAQ really take a beating, kind of the rest of the market go with it. And then everything just kind of devolved into what we saw play out on Tuesday. So we got that aspect of it, I think, kind of kicking things off. And then on top of that, we have this looming debt ceiling issue hanging out there, and by all estimations, and I mean really not even estimations, by what it seems to be the Republicans are just straight up saying is, hey, look, we're going to use this as a political tool. And so now you have one party looking to essentially weaponize the debt ceiling for for political gain, and you have a market that is kind of already spooked, brittle, if you will. We never really saw that gamma buying kick back in. We'll look at that. Actually, I can switch to that chart right now real quick. We've never seen the GEX really come back into full force here and stay positive. In fact, we're negative once again after the close today. So you have those items kind of looming out over the market. And this is just a bad spot right now. This is a market that has not kind of, if you will, fully healed from the selling that we saw to kick September off, and then kind of the big wave down again after the OPEX Friday and the selling that ensued after. Normally you get the initial kind of V-shaped bounce, and then the kind of the crush higher, if you will, as volatility dies down, and you get the roll off essentially from the what are called Vanna flows, right? It's the implied volatility that's dying down that kind of pushes the market higher ever so slowly in a very kind of low volatile climb higher. That never came in, right? So I mean, we never got over that hump to allow that whole process to start over, the process that we've seen ad nauseum over the last year. Never happened, and then you had a very sudden shift in balance sheet composition, which I think kind of kicked off kind of the initial domino, and then on top of that you had the debt ceiling issue now becoming a real serious problem. Now, a quick word on the debt ceiling issue before we look at the chart here. At the end of the day, if you're watching this video, you're probably well aware that debt ceiling is really a vestigial of a bygone era. We are no longer the gold standard. It's nothing that we need. It is an absolute self-imposed limit that has just been overly politicized, and I think most sane thinking people can see that it needs to be done away with. However, there's political theater that can be used every time this comes up, and I mean, so I'm not blaming politicians for being politicians. It is what it is. Unfortunately, when it comes to the debt ceiling, the very sad thing is that this will affect real people negatively if in fact we run out of money in the Treasury. One of the main ways the Treasury is going to get more money to spend, and the function that they do, and the kind of the flow capacity they do is through the sale of different treasuries and what have you. So if that stops, Janet Yellen said October 18th is likely when we'll hit default. And look, in the short run, if that happens, that will make a mess out of the financial sector in the short run, right? It's very important that the pipes constantly have very liquid flow going through them, if you will. It's kind of like I live up in the north, and anyone knows up here, if you're away from an extended period of time, and it's going to be freezing for a couple nights, you need to be running your water in your keep the pipes from freezing over. Otherwise, you'll come home to a mess. Same idea with the financial system. If all of a sudden those flows stop, even though in the grand scheme of things, it wouldn't necessarily cause a recession or anything. I mean, eventually it would resolve. In the short run, it can cause tremendous issues as the financial system, again, needs those flows to constantly be moving. So if we end up getting to October 18th and there's no resolution on this debt ceiling issue, I mean, by that point, if the signal is that there isn't going to be a resolution, shit will already have hit the fan, but it could get very, very bad. So yeah, we have found ourselves in a complete 180 here, in a situation that looked like it might be resolving itself just as late as the end of last week, and now we are now we're in a really tough spot. So what do we need? Well, I think the kind of the balance sheet issue that I saw that kind of kicked some of the stuff off is, for the time being, likely resolved itself. What the big focus is now, without a doubt, is this debt ceiling issue needs to be resolved, and otherwise, I think we could see things get very, very dicey here. Before we wrap up, I do want to just give a few thoughts, technically speaking, here on the chart real quick, just at least what I'm watching in the here and now. You can see we did the back test again, this 4480 zone key resistance. There's a long channel that had been brewing for the better part of the year. We kind of back tested. We broke down from that channel, back tested the channel itself, and so just kind of classic spot to, I guess, break back down from. And at this point, I wouldn't feel terribly bullish until we got back above that zone. Kind of in the current run. In the shorter time frame, we do have this kind of flag pattern here that at this point just looks like a counter trend bounce. And my thought here is we're likely in some sort of ABC wave on a larger 4 wave, as it turns out right now in this current juncture. So again, in the kind of the immediacy, that's what I'm watching. And unless we really start to rally here, I would be very, very careful in this current market situation. Again, just kind of given all the sudden kind of headline moving sort of market moving sort of situations that in this case really do have some real implications. So those are my thoughts, and like I said too, I'll pull this back up. Look, we're not at this point, some of not only is the gamma, the GEX here not in any way signaling a reversal yet. I mean, you still have volatility expanding. Again, I think the best way to explain the current market situation is you're at a very brittle spot, and definitely not a market that is anywhere near any sort of reinforced buying right now. So that's not to say things couldn't resolve overnight, right? Maybe the Republicans will decide, yep, we're going to get this all taken care of, and we're going to get pointed forward and pick a fight a different day. But if the fight's going to be here, and if they seem hell bent on stopping any sort of resolution to resolve this issue, and the Treasury isn't going to come out and take any extraordinary measures like print the coin or mint the coin or whatever it is that they might do to continue funding, then expect some fireworks in markets. Anyway, I'm going to wrap that up. I'm going to wrap this update up here. Those are my thoughts, and we'll see how things continue to play out. As always, if you're new here, make sure you hit subscribe, turn that notification bell on, hit that thumbs up if you like this video, and if you're an active trader, active investor, you like this combination of technical and macro analysis from an MMT perspective, check out my Patreon page, patreon.com/CannonMA. Multiple updates each week, and look, when situations get like this, I'm on quite often, and we're staying active in discussion, whether it's through the updates, or I also have a Discord server where I'll post some thoughts throughout the day as things kind of unfold, especially when we get into very volatile spots here. A lot of money to be made, and potential losses to be had if you're not careful in these spots. So try and stay on top of it. Anyway, I'm gonna wrap it up here. Good trading, everyone, and we'll talk to you next time. Bye bye.